A very good afternoon to you. Let's take a look at the markets. Asian markets ended the week in positive territory, with investors set to be closely watching crucial trade talks between China and the United States, set to take place in Geneva over the weekend. The Nikkei share average rose by 1.56%. The Hang Seng Index gained 0.4%, while the Shanghai Composite Index ended the session 0.3% up. US markets ended with cheer in yesterday's session, with a new trade deal framework between the US and the United Kingdom said to have boosted sentiment. After the deal was signed, Trump was openly encouraging Americans to go out and buy stock now, promising an economic boom. In the short term, at least, some seemingly heeded his call. The Dow Jones Industrial Average rose by 0.62%. The S&P 500 gained 0.6%, while the Nasdaq Composite Index rose by 1.07%. Looking at local indicators here at home, the all-share index is up 1.1% at 91,855 index points. On the currency front, we see that the rand is trading at 18.16 against the US dollar, 20.43 vis-a-vis the euro, and 24.11 against the British pound. We see that the rand has firmed quite nicely against major currencies there. On the commodities front, we see that gold is trading at $3,328 an ounce, platinum at $984 an ounce, while Brent crude oil is trading at $64.02 a barrel. All right, let's get into conversation now with Patrick Mathidi. He's the head of equities and multi-asset strategies at Aluwani Capital Partners. Thank you very much, Patrick, for joining us. So what's your understanding of the detail of the US-UK trade deal? Does it benefit them mutually? And why is it serving to buoy investors? Because ultimately it is only one bilateral trade deal.
Yeah, good afternoon, Norbert. Thanks for having me. I think what we're seeing here is an easing of tensions that had been built up, from April the 2nd, when the first, draft of tariffs were announced. So if you look at what has since been agreed with the UK as a start, it's a lot better than what was initially suggested in April. So, and then if you look at the detail, there's been a lot of give and take, a lot of swings and roundabouts, as we call them. And I would say net, I think it is mutually beneficial because where the UK has given up, the US has actually benefited and vice versa. So, for example, if you look at the overall, package or agreement, there's a 10% tariff on imported goods from the UK, which is done from the proposed 25% early in April, and then in turn, the UK has agreed to lower its tariffs from about 5.1%, 1.8%. And then if you look at some of the sectors, if you look at automotive sector, the tariffs have been reduced to 10% from 27.5%. And then in return, the UK has been allowed to import or export to the US 100,000 vehicles at no tariffs. So you can see that there's been a lot of goodwill, as we call it, and I think that's what the markets are now cheering, cautiously, because we still need to go through the rest of the major trading partners. But there is some hope that this newfound goodwill and common sense will permeate and prevail as the rest of the countries begin to negotiate.
Yeah, so seemingly a good start there. So I see that our local market is up nicely, over 1% at the moment. The rand has strengthened against major currencies, and Bitcoin has shot through $100,000. What's your reading of all of this?
Yeah, I think a lot of that, it is on the back of this breakthrough. But if you look at us at the JSE, we have been on the up and up. In fact, we have outperformed the US markets, on a year-to-date basis. And that is largely because we kind of, we have our own issues to deal with, which the markets are digesting and finding comfort in. But also it has been a very, very tough environment globally, where the major trading partners have actually been on the back foot. And if you look at today, if you look at Germany, for example, up quite nicely on the back of the settlement, which hopefully, as I said earlier, becomes the new normal, so to speak. But I think overall there is newfound optimism, and hopefully that will last as the days progress.
Yeah, indeed. So I saw news that pharmaceutical player Aspen's CEO Stephen Sud bought more than 100 million rands worth of Aspen shares this week, and this follows a negative market update from them last month that a manufacturing contractual issue that they were having could cost them up to 2.8 billion rand, which saw the stock plummet by about 30% in one particular session. What's your feeling about Sud's latest move, and fundamentally, how do you view the company and its prospects?
Yeah, I think the move from the CEO, in my mind, is an attempt to boost confidence in the company. So a 30% fall in one day in a company of this size, it does show that investors were deeply disappointed with the news that came out in the trading update. So I think there's an element of, let's try and save face. Let's show that, we do put, our money where our mouths are. And hopefully this will, create some confidence or rebuild some lost confidence with investors. However, if you look at the fundamentals of the business, this manufacturing contract, which is in dispute, it is quite significant in Aspen's life, and it does create a hole, about 2 billion rand, whatever, in terms of earnings, which is not clear how they're going to plug that hole going forward. So until such time as there's better clarity as to how they can recover in this capacity, I think the share price will continue to be under quite a bit of pressure, or maybe not recover as quickly as possible, given how far it has come down. So I think for us, the jury's still out. We need to go through the results, get better clarity as to actually what happened with this contract, but more so going forward, what are the prospects for actually recovering that lost production and therefore replacing those lost earnings going forward.
Okay, thank you so much for that analysis there. That was Patrick Mathidi. He's the head of equities and multi-asset strategies at Aluwani Capital Partners.